Imagine opening your bank account expecting your usual retirement money and noticing that the amount is not exactly what you expected. Maybe your CPP looks different. Maybe your OAS has changed. Maybe your GIS is lower, higher, or has been recalculated. And the most frustrating part is that you may not have received a simple message explaining why. For Canadian seniors in 2026, this is why it is so important to understand how CPP, OAS, and GIS work together. These programs are not three completely separate boxes. A change in one part of your retirement income can affect how another benefit is calculated, especially when income, taxes, marital status, or the timing of your application comes into the picture. So if you are already receiving CPP or OAS, if you are receiving GIS, or if you are approaching 65 and trying to understand what your retirement income will actually look like, there are several numbers and rules you should know right now. The important thing is that there is no single new CPP, OAS, or GIS payment that every senior receives. Your actual amount depends on your individual circumstances, and that is exactly why looking only at a headline or comparing your payment with your neighbors can be misleading. As of July to September 2026, the maximum OAS pension for someone aged 65 to 74 is $751.97 per month, while the maximum for someone aged 75 or older is $827.17. Those are maximum amounts, not what every senior receives. OAS is affected by factors such as your age, residency history, and whether your income is high enough to trigger the OAS recovery tax. The government also adjusts OAS payments quarterly based on changes in the Consumer Price Index. For the July to September 2026 quarter, OAS benefits increased by 1.2% compared with the previous quarter, bringing the increase over the previous year to 2.3%. And this is the first important point for seniors. If you see a change in your OAS amount, do not automatically assume there has been an error. The amount can change because of the regular quarterly indexation, because your income affects the recovery tax, or because your circumstances have changed. The same principle applies to GIS, but GIS works differently. The Guaranteed Income Supplement is designed for low-income seniors who qualify for OAS, and it is not taxable income. Your GIS amount is recalculated each July using your net income from the previous calendar year. That means the income you reported on your tax return can directly affect the amount of GIS you receive in the new benefit year. This is one of the most important connections between CRA and Service Canada that many seniors overlook. You may think of your tax return as something you file with CRA and forget about, but your income information can also be used to determine your eligibility and payment level for GIS. The current federal GIS information shows that a single, widowed, or divorced senior receiving OAS can receive up to $1,123.17 per month, although the actual amount depends on income and circumstances. So if you are a senior who receives GIS, the question is not simply, did my CPP go up? The better question is, what does my total income now look like, and how does that income affect my GIS? This is where many people get caught off guard. CPP is taxable income. GIS is not taxable income. OAS is taxable income. Those differences matter. A change in your CPP can therefore affect the amount of income used in calculating GIS, even though CPP itself and GIS are separate programs. That does not mean every CPP increase automatically causes a GIS reduction, but it does mean that low-income seniors should understand the interaction rather than looking at one payment in isolation. Now let's look at CPP because this is another area where the numbers can be misunderstood. For 2026, the maximum CPP retirement pension at age 65 is $1,507.65 per month, while the average CPP retirement pension for new beneficiaries at age 65 is $877.01 per month. Your actual CPP can be very different because it depends on how much and how long you contributed, your earnings history, and the age when you started the pension. That difference between the maximum and average is extremely important. You may see a headline online saying seniors can receive more than $1,500 a month from CPP, but that does not mean every senior should expect that amount. The maximum is generally associated with a very strong contribution history. Many Canadians receive considerably less. If you want to know your own number, the most useful place to start is your My Service Canada account, where you can view your CPP contribution information and benefit estimates. And there is another 2026 point that working seniors should understand. If you are under 70, receiving CPP and continuing to work, you can still make CPP contributions and build a CPP post-retirement benefit. Each year of valid contributions can create an additional post-retirement benefit, which is automatically paid the following year. Once you reach 70, CPP contributions stop even if you continue working. You can also choose to stop CPP contributions at age 65 in certain circumstances. So if you are 65, 66, 67, 68, or 69 and still working, do not assume your CPP situation is identical to someone who has completely stopped working. Your contributions and your decision about whether to continue them can affect future retirement income. Now, here is where the story becomes much more important for seniors who receive GIS. Suppose your CPP increases because you have a post-retirement benefit. That extra CPP can be good news because it gives you more retirement income. But if you are receiving GIS, you also need to understand how your income is being considered when your GIS is recalculated. Again, this does not mean the extra CPP dollar disappears dollar for dollar from GIS. It means the two programs interact through your income. That is why looking at your total monthly income is much more useful than celebrating or worrying about one payment by itself. And there is a second connection that many seniors miss. Your OAS can also be affected by higher income through the OAS recovery tax. For July to September 2026, the government lists the OAS repayment range for 2026 net world income as starting at $95,323 for people aged 65 to 74, with the upper threshold at $154,753. For people aged 75 and older, the upper threshold is $160,696. Net world income includes the OAS pension itself. That means a senior with substantial taxable income needs to think beyond the amount showing up on the CPP statement. Investment income, pension income, and other taxable sources can contribute to the income calculation used for the OAS recovery tax. This is why a large RRIF withdrawal, a major taxable investment transaction, or another increase in income can have consequences beyond that one tax return. It is not simply about paying more income tax. Depending on the circumstances, higher income can also affect income-tested benefits, such as GIS, and can contribute to OAS recovery tax. This is the hidden connection that many retirement discussions leave out. The tax return can become the bridge connecting your different retirement programs. That is why Canadian seniors should never make a major retirement income decision by looking at only one number. Before taking a large RRIF withdrawal, selling an investment, changing pension income, or making another decision that could significantly affect your taxable income, look at the possible effect on the entire retirement picture. This is especially important for couples. GIS eligibility and amounts can depend on marital status and the income circumstances of both spouses or common law partners. The government publishes different GIS thresholds and maximum amounts depending on whether the spouse receives OAS, does not receive OAS, or receives the allowance. So if your spouse's situation changes, do not assume your own GIS amount will remain exactly the same. A marriage, separation, death of a spouse, or other change in circumstances can affect benefit calculations, and Service Canada needs accurate information. Another thing seniors should know is that OAS and GIS payments follow a regular schedule. The official 2026 calendar shows that CPP and OAS payments are scheduled for August 27th, September 25th, October 28th, November 26th, and December 22nd. So if you are waiting for your next payment, use the official calendar rather than relying on a social media post claiming that a special payment is coming on a different date. There is no reason to panic simply because a viral post says everyone is getting a new amount. Check your actual account and your official payment information first. Now, if you are already receiving CPP, OAS, or GIS, there are 3 things I would want you to check this week. First, log into your My Service Canada account and look at your current CPP and OAS information. Confirm that your personal details, payment information, and benefit information are correct. Second, look at your CRA information and your most recent tax return or notice of assessment. If you receive GIS, remember that your income information is important because GIS is recalculated each July based on the previous year's net income. Third, compare your actual payment with the official information rather than with what a friend, neighbor, or social media video says you should receive. Your payment can be different because your contribution history, age, income, residency, marital status, and other factors are different. This is also where I want to warn you about something that becomes especially dangerous whenever benefit changes are being discussed: scams. When seniors hear that CPP, OAS, or GIS amounts are changing, scammers may send fake messages claiming that you must confirm your banking information immediately to receive your new payment. They may ask for your social insurance number, credit card information, online banking password, or payment. Do not give that information to an unexpected caller or message. The CRA will not demand immediate payment by phone or ask for gift cards. If you receive this kind of scam, hang up and report it to the Canadian Anti-Fraud Centre. And remember, Service Canada provides official information through government channels including My Service Canada account. The people who work with retirement planners already know that CPP, OAS, and GIS should be looked at together. Most seniors simply see 3 separate payments arriving in their account and never realize how strongly the programs can connect through income. Now you know why that connection matters. And this is especially important in 2026 because the official numbers are changing over time through regular indexation and program adjustments. OAS is reviewed quarterly, and GIS amounts can be recalculated each July. CPP amounts are also affected by the CPP enhancement and by the individual's contribution history and start date. So, if your retirement income looks slightly different this year, do not immediately assume that something has gone wrong, but do not ignore it either. Take a few minutes to find out why. If your OAS increased, understand whether it is the regular quarterly adjustment. If your GIS changed, look at your income and marital circumstances. If your CPP is different, check your contribution record, start date, and any post-retirement contributions. And if your total income increased significantly, consider whether that could affect income-tested benefits or OAS recovery tax. The goal is not to scare you into making a financial decision. The goal is to help you understand what the numbers actually mean. You spent decades working and contributing to Canada, and you deserve to understand how the benefits you qualify for are calculated. So before you make any major change to your retirement income, check the official information first. Do not rely on a viral headline promising a guaranteed payment. Do not assume the maximum amount is what you should receive. And do not assume that a change in CPP, OAS, or GIS exists in isolation. Your retirement income is a system, and the smartest thing you can do is understand how the pieces fit together. If you have already checked your 2026 CPP, OAS, or GIS payment, tell me what province you live in and which benefit you are most interested in understanding. Did your payment change this year, or did it stay about the same? Your experience could help another Canadian senior recognize a question they need to ask. And if someone in your family is receiving CPP, OAS, or GIS and does not regularly check their official information, share this video with them. One accurate piece of information at the right time can prevent a lot of confusion. Most importantly, remember that your exact payment is personal to you. The official maximum CPP retirement pension at 65 is $1,507.65 per month. The average for new beneficiaries is $877.01, and current OAS maximums for July to September 2026 are $751.97 for ages 65 to 74 and $827.17 for ages 75 and over. GIS can reach $1,123.17 per month for a single, widowed, or divorced OAS recipient, depending on eligibility and income. Those figures give you a reference point, but your own payment is the number that matters. Check it through the official government systems, keep your tax information accurate, and pay attention whenever your income or family circumstances change. And before the next CPP and OAS payment date on August 27th, take a few minutes to make sure you know what you are receiving and why. If you want more clear Canadian retirement updates covering CPP, OAS, GIS, CRA rules, and the changes that can affect seniors, subscribe to Canada Seniors Update and turn on notifications. The rules can be complicated, but you should never have to feel confused about your own retirement money.